I believe that we're a little over bought to the upside this morning. So I want to execute a a buying of a micro future option to the put side and see if we can get a little move to the downside, and we actually can make some a little capital with this kind of day trade, doing a zero DTE day trade directional play of buying a put.
Please subscribe to our channel. Happy trading. There's your rest.
Now, we know that if we do this at expiration, if we wait to expiration today, the odds on winning are less than 50-50. But what we're going to try to do is get in and out of it within and try to increase our odds to something like 50 or 60%. So that's what we're going to do here. We're going to send this and see if we can get filled really quickly, and then we'll discuss it a little bit more. So we just sent that and we did not get filled yet. So I'm going to replace this order, and then I'm going to put it in at the mid again, and then we're going to send it. I'm kind of buying this a little in the money. So we just got filled, as you can see right there. And so we bought a put in the money a little bit, trying to bet that the market is a little overheated to the upside today. We stayed inside the expected move completely yesterday, never went outside the expected move, not once, not to the upside, not to the downside, and that's rare in this market. So today we are outside of what was the expected move when I put on a short-term trade yesterday. We do have on an ES 1 DTE trade. If I go over here really quickly and kind of show you that, and so we're already getting threatened to that upside. We were at the 40.50. Now we moved it this morning to the 40.60. So we moved it 10 points away, moved up the put side, and you can see that we have 2 on the put side. This is the type of move that we had. That extended move to the upside overnight and this morning. So we are definitely outside of the expected move once we put that trade on. And so if we go back to this micro future and try to do this kind of day trade, but doing something different than we normally do. We normally sell options for a short-term trade, right? Because we're expecting implied volatility to be overstated, which most of the time it is, and we can make monies on the premium. But this morning, this is a directional play. We're betting that the market's going to go down, and then we're going to try to get out of it way before expiration if we can get a little profit. But this market can be super strong, and we can go to the point where we do some type of 3 standard deviation type of move, or at least a 2 standard deviation move of what was expected. So yesterday the expected move was about $30, let's say, give or take, more of the give, and so today if we are up 60 points, then that's basically a 2 standard deviation move. We were just up a little over 40, so it feels like that is what the market wants to do. This is the play. We're going to stick with this play and see if we can win. But if we're down 50% on that directional play, we'll say uncle. And if we are up $75 to $100, then we will get out of that directional play. Or if the time is running out in the day, let's say we're still in the play and it's noon Central Standard Time or 1 p.m. Central Standard Time, then we'll take whatever profits that we have at that point, and hopefully it's a nice little win. We'll see, right? Because I think this market is a little over heated to the upside, a little overdone to the upside. All right, so that's what I wanted to kind of do really quickly with that play.